Hey everybody, it's Greg Rice here in Pawtucket, Rhode Island, and we're with a very elusive Mick Zhukavets. How you doing, Mick?
Hey Greg.
How you doing, brother?
Well, thank you.
Mick is our leasing director, and we're going to poke his brain today about the current leasing conditions. What's the market like, right? Are you renting things quickly? Are you renting them slow? Are the prices high? Are they low? Are they sitting if they're houses? Kind of give us a download of the whole situation as you see it today.
Very, very busy market to start the year. I think it peaked in around late spring, beginning of the summer. We saw a huge surge in rent amounts. Owners were purchasing the buildings at highest market possible. Therefore, it was translated to the rents. You know, the highest rents amounts we were seeing in about June, July, August, where rental market is very active, lots of movement. And that's where people who signed leases May, June, July, August were in a position to accept a very high rent moving forward. And if you signed a 12-month lease at that time, you may see some challenging situations, let's say, in the future towards the end of that lease. So yes, busy summer, highest rents ever seen, very rapid increases, and it slowed down quite a bit since then. So August, we start seeing prices plateaued. September, we're seeing that the property is staying on the market for longer, they sit on the market with the high rent desire, right? So people are looking now to move. They're probably facing less challenging conditions than they were 3-4 months ago. Although prices have not gone down as expected or as rapid as was expected. So we're still facing high rental prices, and unfortunately market is slowing down, and we see our annual slowdown with the holidays, with the upcoming Thanksgiving and Christmas time, but we also seeing a slowdown overall with pricing, and it's caused by inflation, and it's caused by uncertainty that people feel, anticipate, and the prospects are more careful what they're going for and what are they signing up for.
And single families, right? Usually, I would say in my 10 years, were the quickest and easiest to rent. And lately, actually, an example was in Cranston. We have it's like a 4-bed, 2.5-bath house, a small garage, a yard. Like it checks all the boxes, laundry, 3 stories of living space, and it was sitting, right? We posted it up there for, I think, $3,300 or so, which is, pretty fair price. No action. We drop it to $3,000, still quiet. Then we drop it into the high 2s, and we finally rented it last week, I think, for $2,600.
Correct.
So to me, that was abnormal, because those were the first things to go, especially in a suburban area like Cranston. It's the good school systems, you got a yard, you got parking, it's a desirable location. So why do you think the single families are sitting for longer?
Well, overall it's a complex question. I believe there could be a number of answers, which are valid answers. In my opinion, it follows just the overall trend of pricing adjusting. As we mentioned, August and September, all the statistics show that asking price, it was the first instance in decades that asking price was lower than previous months. So sellers are starting to settle for less. They are accepting below asking offers. They're trying to sell the house, and it's trend where the pricing will adjust accordingly following those sale prices, and at this point rental prices remaining inflated, I would say,
Mm.
and therefore it's challenging prospects while searching for properties, evaluating this again, and with anticipation of adjustment coming or slowdown on the real estate market overall. Everyone is anticipating the rental prices to adjust as well accordingly, meaning to be lower. Unfortunately, it hasn't happened, so we are sort of coming into this backlog where the properties sitting longer due to the fact that the owners purchased the building at a very high price. They anticipate
Yep.
the certain number to offset their mortgage, and unfortunately, the anticipation doesn't match up with a overall trend of slowing down, overall cyclical annual slowdown for the end of the year and holidays, and we're seeing overall market adjustment as far as sale price and
Yeah.
rental prices
Another,
to follow.
yeah, it's a combination there, and kind of switching gears to the apartments. For example, we have an apartment on Harrison Street
Correct.
that is above average quality. I'm talking nice cabinets, granite, stainless, new flooring. The thing is beautiful, right? And the owner wants $2,000 for it. And the problem is that he purchased it for a high price, right? And he needs X amount of rent to sustain his mortgage, like Mick's talking about. But that area is not typically conducive to these numbers. So that's a problem, is that yes, your house may be beautiful, but if it's in a tough neighborhood like this one on Harrison Street, it's going to be hard to get somebody that's willing to pay that money to live in that area. And I'm just being honest, right? You see Harrison Street on the news, somebody was shot and killed there. There's prostitutions, there's drug busts all the time. This is public information. So the general public knows that. Tenants know that, right? So you're coming into a problem now where they've overspent for the house, they've overspent on the repairs,
Correct.
and now they're coming to him to like save the day, and he's like, well, I can do my best, and we're posting it at 2,000, and it's been sitting, and the owner's complaining to us why it's not rented. So a lot of these inefficiencies are going to start to kind of come to a head.
I guess the opinion back in where the market was growing with such a rapid pace, it was how long it can sustain itself, right? So for how long the tenants will be forced to pay those and will be able to sustain paying those prices until it kind of caves in, right? So I think we are seeing tides changing. I think we're over the hump and we're on a little downhill trend right now in the market. So as hot as it was, we're gonna see a cool off, and the owners who are price their units reasonably with understanding of conditions, of outside factors, should be in a better position than the owners who are just trying to make their numbers based on purchasing price what they paid 6 months ago.
Another point is mortgage rates, right? They're at decades, it's probably 15-year high, right? So that is creating where people don't want to buy a house because the rate is so high, right? Their payment's going to be more than they can afford. So they're going to stay as renters. So that's another thing in the landlord's favor, is that people will be forced to remain renters until the rates cool off. Because at these prices, with that 7% interest rate, you're talking about thousands more in your payment compared to when there were 2 and 3% interest rates just 2 years ago. So what's your thoughts on people kind of becoming forced or hostage renters, if you will?
Oh yes, I believe that is a trend as well. But this trend, I believe, in some cases, is a choice. Tenants who are thinking of purchasing a home, they have taken a pause. They say, oh, well, let's see what happens. We're not going to buy at 7%. We're not going to buy at the pricing that it was 3-4 months ago. In many cases, they will downsize. They will, go on month-to-month lease, sort of wait it out in expectation of adjustment, the pricing, or more than that, the interest rates. They are waiting for the interest rates to come down, to go down. And while they're waiting, many choose to downsize and save their money, which is a great option.
Yeah.
Yeah.
Cool. So if anybody at home has any questions for you and they want to know more, what should they do?
Please reach out to us. Please watch our YouTube channel. We provide lots of guidance, lots of great topics that Greg talks about. Stay tuned, and we will do our best to update you on the rest.
Sounds good. If you have anything for me, put it in the comments field below. I'll get right back to you. Once again, Greg Rice here in the bucket with Mick Zhukavets, our leasing director.
Thanks, Greg.
Great job, brother.
Thank you, everybody.